Good morning, traders and investors. This week on Wall Street, once again, pure drama. Tariffs just got struck down. The S&P hit new all-time high. AI stocks had a bit of a meltdown, and retail earnings crushed estimates. And oh yeah, the US government took 10% stake in Intel. So here's a rundown on the economic news that moved the markets this week. We're talking about the August 25th till 29th. So tariff ruling, AI, flashpoint, a appeal court rules most of Trump's tariff illegal. Who would have thought? So shaking off inflation fears and triggering optimism across the sector. Now at the same time, Alibaba just had its earnings. They beat on earnings, missed on revenue, but they also revealed a own AI chip. Now this brought the stock soaring, as you can see here, almost 13%, while the US AI chips, Nvidia, AMD, and Marvel stock got a bit hit. So Alibaba, massive jump here. Will this hold? Let's see what the future holds for this stock. Definitely keep subscribed to the channel for more Alibaba news. Now also the clash, because regulatory relief versus rising competition hit in the AI chip race. Also, we got ourselves a record-setting market surge because the S&P once more, although it did close up negative on Friday, but we just hit a new record all-time high, hitting it at 6,504 on the S&P 500. So massive surge. The US second quarter GDP got released and it beat estimates. So the forecast was 3.1%. And it actually came in at 3.3%, and jobless claims fell below expectations, underpinning markets' confidence. Now, although the S&P, as I said, reached a new record all-time high, the Dow Jones still trying to, well, it did set in new all-time record highs, but it's still trying to climb up here. Followed also by the Nasdaq, which kind of set in its top, and I don't know if this is going to hold here, but it could just break down. And if we see this 50-day moving average got hit, then I would expect also the 100-day moving average to get hit as well. You can see here we have a negative conversion on the RSI, which indicates that the trend is downwards for the Nasdaq. Also, if we take a look at the S&P, although new all-time highs, RSI reaching towards downwards at the 50, so this means negative divergence, meaning expect a pullback in the S&P, which would be actually healthy. Now, notably, small caps and value sectors lagged again, highlighting divergence leadership beyond the big tech. In other news, also the Fed cut hopes fuel momentum in the stock market. Markets surge on the 85% probability of 25 basis points Fed cut in September. Now, remember, if they cut in September, so the probability is really high that they cut, first of all, that they will cut most likely 25. They could cut 50, but the question is, will they cut afterwards? So yet another big question that looms then in the market, which could bring the markets down in September. Or it's going to go down before that, and the Fed rate cuts will fuel the markets for that run in the end of the year. Now let's jump to a couple of earnings that hit last week markets. So Nvidia, first of all, posted impressive results. EPS jumps plus 54% and revenue 56%. So the beat earnings, beat on revenue. Still shares disappointed, and they had a, well, not a massive drop, but they did have a little drop here. They actually closed down it in a negative 3 or 5%, something like that, from their top. Now, due to concerns over the AI chip demand and intensifying competition. But I do have to note that in these earnings, the CEO Jensen Huang actually mentioned that there are no China earnings integrated. So when those will hit the stock, I do, sorry about that, I do believe that the stock will again massively surge. But Nvidia had once more from its April lows a massive run here. If I would just do a simple Fibonacci retracement diagram, then it has a lot to go in order for the stock to have a little bit of a correction. So we're currently sitting underneath the 20-day moving average, but above the 50-day moving average. And we have the 100-day and the 200-day moving average underneath of that as support. Also, we have here a beautiful range of support that I would consider. So a nice retracement here in the 100 and 200-day moving average area would be where I would buy once more Nvidia. I still hold Nvidia stock, but this would be a perfect place to add once more to Nvidia. Now, moving on to Autodesk. Autodesk also had its earnings. It has a massive pop after the earnings, unlocked massive gains. It did have positive earnings all over the board. So beat on revenue, beat on earnings. Still, it had a massive pop and a retracement of that pop, ending the day in the negative. So not even, let's just say here, almost new all-time highs. Autodesk, if you never heard about, no, actually it's not all-time highs. Let me just go back here. Well, so Autodesk, what did they actually do? They provide software for construction and pipeline companies, electronic companies. They have everything, as they say, in the BIM, basic integrated model solution. They are a provider for planners, okay, and executioners, software provider that is. Now, with the AI play, I would say that they have massive opportunities for future growth, because they're actually just two big players in the world. That one is Autodesk and the other one is Nemetschek. So kind of a duopoly in the whole world, so not just in one country, but in the entire world. And that is why I would keep, I don't own any Autodesk shares anymore, but I will keep my eye on Autodesk here. Let's see how the AI, because they're extremely expensive. So if AI will bring in more customers and maintain the price, or even bring the price higher, then they would have massive earnings in the future. Okay, let's quickly talk about CrowdStrike. And let me take out all of these. And no, actually let them, I'm going to leave them in here. So CrowdStrike had their earnings, great earnings, announced a buy of another company, still massive pullback after this jump. You see we're in the daily. Let's go here for the year. So CrowdStrike jumped to its 50-day moving average. Now currently it's still sitting, the 50 is above the 20-day moving average. So there's and it's actually, the 50 is above the 20 and above the 100-day moving average. So that is okay. But the 20-day have first of all to cross the 50-day, the 100-day, and the 200-day, the 100-day and the 50-day moving average. So what it has to do here is retest this 20-day moving average. And if it holds, I would gladly, because I sold my CrowdStrike. Actually, we're going to go into my trades for the week, as always, at the end of the video. But I already announced I did sell my CrowdStrike shares. So I'm expecting a retest of this, and if it holds, want to go higher, then the next level will be its new all-time highs. And after that, if it surpasses that, because this is going to be a major resistance level here, just add this as resistance level, then the next probability is a 554 range, price range for me as a target, where I would take profits once more. So add to this, take profits here, and then take profits here. And if it holds, leave some in there. Let's go to 100%. Now, a couple of honorable mentions. Dell had its earnings, and let's just take a look at Dell, because it fell massively. Even breached its 100-day moving average, and then it retraced from there. Dell retraced from there. So if it holds here, it has a nice test here. If it holds and goes up, then Dell could still have a nice little run here. But I wouldn't keep my hopes that high for Dell. You can see here it also had a massive negative conversion. They did have positive earnings, so who knows? Maybe it's a turnaround story. But I know Dell just had a massive run, and maybe it just needs to cool off, because we see lower and lower highs and lower lows. Meaning it's maybe, let's take here a couple of lines, it's maybe in a downtrend. This is going to make it even more obvious that Dell maybe has had its best days behind it. Okay, last but not least, this is not a, let's say, earning report, but Eli Lilly, ticker symbol LLY, which is also in a downtrend, just released there, or it had a massive gain here. And I gave it all back, or at least 25% gave it back after they gained 6% on promising positive pill trial results. So this is maybe the third trial, something like that. So they have one more trial ahead of them, I believe. Double check me on that one. So further sentiment is strong in the weight loss therapeutics, but it's kind of, the story is kind of dying off here. They're also in the downtrend. They have a lot before they are going to become positive once more here. So they have right now, they cannot, this was the fourth try to breach the 50-day moving average. And for all you listeners out there of my podcast, so it's completely flipped. It's the 200, the 100, the 50, and the 20-day moving average are one above each other. So the 20-day moving average has to cross 3 major moving averages in order to turn back here as a positive. So could this happen? Yes. What are the probabilities in the next year? Maybe they're higher. I know. I still believe that this is not over, but it's a hard battle from here on for Eli Lilly. I no longer earn Eli Lilly shares. As you'll be following my channel, I already sold out of all of my shares. Not necessarily meaning that that's a negative for Eli Lilly or you Eli Lilly holders out there. Don't despair. Just keep in mind there that this is in a negative trend. Maybe just sell a couple of puts down here. And if you're going to be assigned, then you just own more Eli Lilly shares. But you can protect, gain a bit, make some money on the way down here, if this trend is going to continue. And if it's not, then you're going to earn more. If it's not, you're going to make money. And if it is, then you're going to have more shares. Okay, now moving on to some major Intel news where the US takes 10% stake in Intel, which is not necessarily good, I would say, because it kind of smells like communism for me. But the US government acquires 10% equity stake in Intel. Now, they don't have any share voting rights, as I believe. Basically, Intel gave some money, and not just some, but 8.9 billion in the CHIPS Act, and secures enclave funding into shares that make it the chip's giant largest shareholder. So basically what actually happened here, the US government gave Intel some money, they received some shares. Now it's a passive stake with as I said, no onboard seat, but includes a warrant for an additional 5% if Intel foundry ownership drops below 51%. Now, Intel raised a red flag such as government involvement may damage international sales, given that over 70% of its revenue comes from abroad, especially China, also Singapore and Taiwan. So that is why Intel shares once more jumped, and the 20-day, but this time the 20-day moving average is above the major indices, but it still has to turn. It still has a lot of work to do here. So Intel, if you take a look at here at the larger diagram, is massively down from its all-time highs, over 50%. So it's massively down, actually down 60%, something like that. Now, in order for Intel to become once more the top story and become profitable, it has a long way ahead of it. I am an Intel shareholder, and I do hope that this story will turn around. But once more, we still have to remember that most turnaround stories don't actually turn around. But hey, let's keep our fingers crossed, because at the moment, there's nothing we can do except hope that the new CEO, which Trump kind of criticized, and they took stake in their shares, will do something. They have massive problems. They actually are thought to become profitable somewhere in 2026 or next year, or even the year after that. Okay, so let's do a quick rundown of the market. So policy stocks, tariffs ruling, and the Fed speaks. Wrote the script. Earnings brought some volatility into the markets. That's why we see that we have here a beautiful reddish greenish day. So kind of a rotation out of this sector. Even Caterpillar is massively down. GE Vernova and Deere is down. And also keeping an eye on next week's event, which will be the week from the 1st of September Remember, Monday is off till the 7th of September. So we have then on Monday nothing. On Tuesday, we have ISM manufacturing and PMI. This is going to move markets definitely. Then we have the jobs opening, the jobs report, the ISM services PMI once more on Tuesday, so on Thursday, and on Friday we have non-farm payrolls and unemployment rate. So definitely keep some cash for the next week. There's a lot that could happen, and the week after that we have core inflation rate, the PPI, and after that we have building permits and retail sales, and we have the FOMC meetings. So a really hard September awaits us. So keep your cash, keep your dry powder safe and dry, because maybe you will have, or we will have, the possibility to put it to use. Now, before I do my trades, I do want to announce that I'm going to start a series on investing, starting with the real basics of what are stocks, how to invest, how to buy and sell stocks. So if you're interested, then keep subscribed to the channel and hit that notification bell in order to get notified, because I'm going to release that series pretty soon. Okay, so let's jump into the trades that I did last week. With this, we're going to close up the week of August. So we're currently sitting at $985 for the month of August. Remember, I have a really strict target that I want to reach, and that is 500 in a week and 2,000 in a month. I will reveal and on if I reach that or not this week. So let's get started with the trades that I did, why I did them, and if they were profitable or not. So I also have a really interesting one in there. So we are talking about the week of the 25th August till the 29th. And the first trade that I did was actually on Tuesday, and that is SoFi, ticker symbol SOFI. The trade that I did was on Tuesday, and it was a meagering 17.50, but I just got in, got out, and let's just take a look at SoFi, what it did after that. It had it pulled back. Now, let's just think about this. SoFi, massive run from its earnings. If you do a Fibonacci retracement here, then it has a lot of way to go. It's currently seeing about all of its moving averages, and on a Fibonacci retracement, it has, well, all of the possibilities to come back here. It's starting to have a negative conversion, so the RSI is coming back from its all-time highs of 82. It's currently sitting at 63, and the MACD is also trying to, the MACD divergence convergence is trying to flip here to a sell signal. So that is why I just got in the trade and also got out of the trade. I do expect here to have a big chance where we could actually add to some more shares of SoFi. So the zone will be somewhere here where I would be comfortable adding to SoFi. Now it has another zone, which was a big one, and that is down here. And that is the second zone where I would add to SoFi. So with this being said, let's close this up and let's go to the next one, which was a small trade, but I kind of lost confidence for now in Ferrari, ticker symbol RACE. This trade was on the 27th, and it was also a very small trade, so 15.1 euros. Now, let's just take a look at Ferrari here. It's kind of range bound for the entire year, right? For the entire year, it was range bound, so I would say that if this right here is where Ferrari is trading, also having a second one down here, which is kind of breaked out, then I would expect after this turnaround to have another possibility. So we are currently sitting at a MACD positive buy signal on a year. We are currently sitting at the RSI that could move even higher if the big stocks kind of pull back. So it's more of a safer trade here. And after it's pulled back once more, so if something happens in the market, and if that something is bigger than just the tech sector, is going to pull also Ferrari down. Now that is where I would consider adding back to Ferrari. And that's it with my thoughts on Ferrari for now. Another trade that I made was in Rheinmetall once more, the German defense company. And this was on the 28th. I made here a nice 55.5 euros, and that is converting into a 47.65. Now, the current conversion rate from euro to US dollar is 1.16, and that is massively impacting me where I do trades in US dollars or where I do them in euros. Now, let's just take a quick look at Rheinmetall. Although I did sell my shares maybe a little bit premature, just trying to have here a good run. Once again, if there is a small correction in the markets, this is going to pull everything down. So Rheinmetall, still a good trade. It had a massive run here, but I'm kind of skittish right now on Rheinmetall, so I would expect a pullback. Test this zone right here, and if it holds, add back to it, and then just ride it up here in the next zone. So let's just say that there are two zones that I'm watching currently right now, and this down here is one zone, and the other zone will be right up here. So that's not that big of a trade that you can do here. So from here to here, that would be, well, a 20%, which is not bad, but still there's a lot of things that has to happen in order for this to become a positive. Because as you can see here that the trend is just going down. For me, this is a downtrend. This is why I'm currently skeptical on Rheinmetall and if it's going to pop and make another massive run like it did in the last years. Because just take a look at this. From the 2024s, it had a complete year where it went absolutely nowhere. So I'm trying to avoid this. This is just money that is stuck then. Please, let's close up Rheinmetall. And now let's move to one of my big ones. So it starts with A and it ends with bet, and that is Alphabet. Google, ticker symbol GOOGL. Sold all of my shares in Google. I'm going to just go over it right in a couple of seconds why I did it on the 28th of August. And I sold it in two tranches, and this is going to make everything a bit confusing. So when I'm adding something here, as you can see, I'm adding a gross profit or loss. Now, when I'm adding a gross profit, I programmed this in order to calculate automatically the taxes, so you can also see the net profit, so after taxes. So what I'm going to do now is show you, first of all, a loss. So it was a negative 3.5988, and I'm going to explain it just in a couple of seconds. So this is going to be negative. It's going to basically reduce all of my gains. Then I got a tax correction on that. So tax correction. I got a much larger tax correction, but that is calculated at the end of the trading day. So because I did multiple trades, the trades that are following or that are before this tax correction are without taxes. So you know what? I'm actually going to add the trades. So after Alphabet, I did Visa, ticker symbol V. And actually, I have to add this with negative taxes. So I did 37 profit. But I do have that because my program here deducts the taxes, do have to multiply 1.265, 26.5% that is a 47.72 gain. I'm just going to add it here, and it's going to deduct then, on the 28th, that is. After it's going to deduct taxes, and we're almost back at where we, let's just increase it to 28 because I have to round it up. Update, there we go. I also sold some Constellation and software, not energy. And this is a really expensive stock. Now, this is a Canadian stock, so I have to add here the ticker symbol of W9C, also on the 28th, and it here a 10 euro gain, little small gain. I was still negative. Then, as I said, I sold CrowdStrike holding ticker symbol CRWD on the 28th also, and I did here let's just do here a quick calculation. 57.11 times 126.5, 72.24 gain. And let's just take a quick look at cross. We already took a look at the diagram in the rundown there of its earnings.
Papa, why the Plunge is on 20 bucks and they can make them over, please.
And now we'll add the tax correction, which was 68.31 euros, and I have to add it down here actually. And this was also on the 28th, so at the end of the trading day. Let's say here to get some tax. Okay, let's add this. And now I'm going to add on the 29th, so Alphabet Class A shares, ticker symbol GOOGL on the 29th, where I sold the rest of my shares, which then brought me to 421.91 euro gain. And I also had to pay taxes on this. So this is bringing us in a positive of 160 euros, which is $187 for the last week. And now I'm going to explain what happened with Alphabet. So I bought Alphabet pretty much up here last time. And I was right for a couple of days, and then I was wrong. So this is why I sold my shares. When I sold my shares here on the 29th, first of all, on the 28th, let's just zoom in here. When I sold my shares on the 28th, I first of all had to take a loss because I bought it right here. And then the gain was just from here to here. Okay, and after that, it also jumped even higher, breaching its new, setting new all-time highs for Alphabet. Now, I do have to mention that Alphabet is currently in a positive RSI, a 74, which is above its 70 RSI, so it's pretty oversold, or overbought, sorry about that. It's pretty overbought. It does have a MACD buy signal still intact, but I would expect a pullback. And there are two sectors where I would like to add. One is this, which is, let's just change this to green. This is one region where I would like to add, so somewhere between the 200 and the 190 price. And then the second one, I'm now going to do a Fibonacci retracement here, is somewhere down here between this 38 and 61. So somewhere down here is where I would massively add back to Google. And why is that? Well, because I believe that Google will have its next big play after also settle their problems in court, when people start to realize that the AI gain from ChatGPT and so far and so on is not really that great, and that Google still has the edge and its massive moat. Okay, so with this being said, thank you so much for watching. I'm Noble PM. This is Wealth Town, where we grow and protect our wealth. So definitely keep subscribed, like this video, and catch you next time. Stay safe out there. Bye-bye.